it gives a sense of why the dollar keeps on strengthening today. Again, massive move, especially against the yen. How important is the inflation read? What are you expecting, and how would it move the dial for the Fed?
Well, no reason to disagree with consensus forecast that we're going to be up in headline terms at least from 8.5 to something closer to 9%. I think, you know, the details in terms of the breadth of inflation pressures, so not just in the core ex-food and energy, but maybe some of the, you know, the numbers coming out of like the Cleveland Fed, for example, will be important. But, you know, it's very hard to see, you know, unless we see some really significant downside surprises, not just in this week's inflation print, but also when we head to the end of the week and the next University of Michigan Consumer Sentiment Index and what happens with that 5 to 10-year inflation expectations reading. You know, big downside surprises, I think, are a minimum prerequisite for, you know, the US dollar to you know, to maybe at least pause for breath, at least on the upside. But as things stand, it's either, you know, inflation surprises, seeing a ratcheting up in US rates, even if other rates are going up, supporting the dollar, you know, or it's risk sentiment deteriorating. And, you know, Mark mentions upcoming corporate earnings. You know, I also wonder whether the strength of the dollar, given, you know, the dependence of S&P 500 companies on overseas earnings, you know, there's more warnings there about the headwinds to top-line revenue from the strength of the dollar. So, you know, whether it's risk sentiment or whether it's, you know, further repricing for the Fed, we're still struggling to see the conditions for a weaker dollar falling into place anytime soon.
Ray, well, give me a sense, though, you know, we don't see any signs of a slowdown particularly. We've got that jobs report, which is stronger than expected, but, you know, that's backward-looking. Most data is, of course, backward-looking. The thing being here, how much do you think a recession should be priced into the markets, and how much is now?
Well, I think there's obviously that difference between what we might find out at the end of the month, when there's still a good chance that Q2 GDP will print negative, and so we will meet that technical definition of recession, two consecutive quarters of negative growth. But you look at the labour market, and there is scant evidence of recession there. And, you know, we're really talking about the economic downturn that, you know, that lies ahead as a result of the lagged impact of the policy tightening that we're seeing now. And I think that is still a 2023 story. Have risk markets adequately priced a full-blown recession? Well, certainly if you look at the average kind of peak to trough decline in the major US indices in past recessions, you'd have to say no. So I still think the risks are for another, you know, another lurch lower, either because we're pricing in that recession with more conviction, or, and again, Mark just mentioned it, if we head into next week and there's no sign that, you know, Russian gas supplies into Europe are going to be accelerating, following the planned end of maintenance, I think that is also a major potential risk-off event that could have global ramifications, and again will, you know, could be the catalyst for euro heading through below parity if it hasn't reached there already, and that can only mean that dollar indices are going to head still higher.
Ray, dollar yen at fresh 24-year lows. Of course, we had Kuroda saying that he's willing to ease policy even more if needed, and that there are great uncertainties out there. How low can dollar yen go?
Well, I think the last time I was here a week or two ago, which was the BOJ meeting, I said that I didn't think we were heading up to 140 in short order, at least, but that was 2 weeks ago. And I think the combination today of Mr. Kuroda saying that if we're going to go anywhere on policy, either in terms of the cash rate or the YCC policy, we're going to be easing policy. That certainly seems to play with the grain of dollar yen. And then we've seen Treasury yields after Friday's rise of extending those gains in the Tokyo market. So that's a pretty heady combination. So at the moment, I think it's pretty hard to rule out, you know, the risk of us moving up to 140. Still think that BOJ doesn't have a particular concern about levels here. It's about speed of move. So I think there will be perhaps more caution if we do head up onto a 138 or 139 handle in the near term. But you know, for the moment, having thought that you know, a correction was due, Treasury yields have headed back higher. YCC is locked in for the indefinite future. On that basis, it's you know, other than in the context of a really, really big risk-off move from here that brings the yen's preeminent safe haven characteristics back to the floor, it's going to be hard to fight this stronger dollar yen trend just at the moment.
Ray, the risk of sentiment impacting emerging market currencies, of course, we're seeing the weakness in Thai baht just this morning. I mean, is any particular currency at risk? Any currencies we should be looking out for?
Well, if you look across the EM spectrum globally, not just in Asia, the one anomaly at the moment is the stability of dollar against the Chinese yuan. So EM, is weak across the board, unsurprisingly, given, strengthening US dollar, rising US interest rates. It's always a combination that puts pressure on EM. But dollar yuan, has been rock solid. So, whether that is on borrowed time or not, I couldn't say. It does seem like there must be some flow that is providing a degree of stability there. But as we go through the year, given the latest news, on COVID, etc., is making it hard to believe that China's going to come anywhere close to achieving that 5.5% growth target. And if the dollar stays strong, our forecast is still that dollar yuan heads up to between 6.75 and 7 in the second half of the year. No reason to change that view at this stage.
Ray, very quickly, against European currencies here, looking at euro, you're saying it's inevitable that it goes to parity, maybe even below. What about sterling, very quickly?
Sterling, I think, is still, still got more weakness ahead. Whoever takes over the Conservative Party is going to be a staunch Brexiter. For me, the issue is what's the fate of this proposed change to the Northern Ireland Protocol? If that comes to a head once we get a new Parliament and it looks like it could be approved, then we're in for for new bun fight with the EU and the prospect of tariffs and potentially UK-EU trade reverting to WTO rules. So still not convinced the Bank of England's going to do what's priced. So, we still think there's more weakness ahead for sterling.